Tēnā koutou, tēnā koutou katoa. So, mentioned I'm just Graham Mitchell, I'm the CE at National Infrastructure. Just recently literally landed back from Canada on Monday, so I've been seeing lots of transport infrastructure. I can assure you the state highways don't look like that. They are, you can actually see the rhubarb on the 401. Does anyone know where the 401 is in Toronto? It's the elevated highway and the salt's corroded it, and you can actually see all the rhubarb coming off all the support pylons. So we decided not to park underneath that. It is the most congested highway in North America. So anyway, anybody know what that road is? Waikato Expressway. 100 kilometres of divided highway. We're now apparently going to build another 100 kilometre divided highway to Whangarei. Right. Do anything here? Page down? Should work. All right. Yeah, touchscreen. There we go. Just quickly go through a little quick background on us. So just on your right there, we're a what they call a Schedule 41A company. So we're actually a creature of the Public Finance Act, and we're sort of not quite an SOE, but we're closest to an SOE. So quite different to what NZTA is, which is a Crown entity. Minister of Finance, Minister of Infrastructure, our shareholding ministers, private sector board, and underneath we've got the organisation, and we're basically mainly all private sector. We're based in Auckland, although we do have a couple of staff members actually up here, just over that building there. On the private capital front, we work with Invest New Zealand, which is the basically New Zealand government inbound arm for investment into New Zealand. Part of NZTA is going to be spun out separately shortly. Our key role is to attract private investment into New Zealand for public infrastructure, funding and financial expertise. Although we do have some engineers as well, doing various things that we do. So the investor shop front, so that's what that's focused on. It's one of the things I'm doing in Canada. I was talking to pension funds about investing in public infrastructure here. We're at Investor Summit. It's quite a big focus to try and bring that sort of capital into New Zealand. We also advise the core agencies, including NZTA, on alternative financing, PPPs. We're also advising on city regional deals to the government as well. Market-led proposals are unsolicited bids, so if somebody's got a unique idea, they can put that into us. We run that process for the government. Infrastructure funds, we've got a number of funds in that area which are effectively both private and public, where we either grant fund or we do concessionary loans. So we've got cyclone recovery in there, which is about 2.7 billion if I include the council element. So that's basically buying the houses out, replacing probably about $750 million of transport infrastructure as a damage of the cyclone, building stop banks and buying about 1,500 homes. Digital connectivity, talked about, we started with UFB, we're doing the rural mobile rollout. We're also running with police. They roll out an emergency services network for police, fire and ambulance across the country. So they've all got their mobile phone, they get a special SIM called PSN SIM, which means that their phone will roam seamlessly across any carrier. They get prioritisation, preemption, everything like that. So if you're streaming a video and you're a paramedic, you can stream that across everybody else's. And we borrow off our own balance sheet and we invest directly into infrastructure as well. So there's a few things that we do there. So this is part of a core role here. So here's all your different fund types down the side. So here's the investors that we interact with, including bank, financial institutions. We've got about 25 on our banking debt panel. Then what we call a specialised PPP, private partnership. Equity investors, you have people like Aberdeen, they're about $1 billion US dollar fund out of Scotland, obviously. Amber Capital, large American plenary, people like that are specialised. And we've got sort of a pension fund, which I've seen up in Canada. I've seen BCI, British Columbia Pension Fund, CDPQ, data pension fund for Quebec, the Teachers Pension Fund for Ontario. There's a few others in there as well. Then you've got the sovereign wealth funds that we work with, iwi, the Kiwi Saver funds as well that we're starting to work with now as well, and also property investors, so when we're doing leasing type transactions. And then we have a number of sort of what we call intermediary type vehicles to basically translate that sort of private capital into public infrastructure. Public infrastructure is quite a hard class to invest in, not a lot of revenue sources in there, so you need these sort of intermediary vehicles to be able to attract the private capital. So that's a core part of our role in that area there. So a few projects that we're working on with the agency at the moment and the government is we're helping the agency on the on the commercial and the financing side of the Northern Expressway Stage 1 up to, that's just had its EOI been into market, so it's been evaluated. At the moment, some work on the second harbour crossing, so there's a start of a market sounding on that, and we're just about to commence a market sounding that we're actually working jointly with the government on, that we're jointly leading on toll concessions on the existing 3 toll roads and the 3 announced toll roads as well. So there's 6 plus greenfields as well. So I was asked to talk a bit about private funding options for transport. So just to be clear, when you're doing a private partnership, a PPP, that's not a funding source. It's a form of procurement, that's a financing. It's not a source of funding. So you still have to pay for it. So we have done some of these in New Zealand. So we did have the Harbour Bridge, which was fully funded from tolls. We didn't back that up with private debt, but still it was fully funded by tolls. That's an example. We've done one here in Tauranga, but further north, where we actually used infrastructure funding and financing levies, which is the act where we charging all the 70,000 residents there about $75 to $80 a year per $1 million of CV indexed over 25 years. That funds about a third of their transport upgrade program. NZTA tops in some money as well. And there's another type of private capital which has been used in New Zealand before, which we call developer capital contributions. So this is where a developer will actually give a capital contribution to a transport project. This is the only one ever done in New Zealand, which is the Sylvia Park station. So the developer, there being Kiwi Property, actually made a capital contribution to the station to get the station located close to the mall. Which obviously is a good reason to do so. That sort of structure is very common internationally, but for some reason we just like building them ourselves. And why? When somebody can build it for us for free. So here are some international examples. These are all real living projects that are actually underway now or completed. So you've got North Connect in Sydney, which is effectively connects up to the F1 in Sydney. It's the main interconnect road. That was a market-led proposal by Transurban and CPP IB, which is one of the other Canadian pension funds. So effectively, they had the toll concession feeder route into this road. So they've effectively won that, and it's actually operational now. And it's actually funded through tolls and private capital, fully private capital and equity. So it's an example about how you can do that there. Who's got the Pink Floyd album with the power station on it? Animals. So what happened here was actually a project. The old Battersea Power Station was owned by the Malaysian Wealth Fund. It was fairly desolate. Nothing was really happening. So Boris Johnson, when he was Mayor of London, came up with a scheme. He managed to convince the government to lend the city £1 billion to extend the Northern Line under the Thames into Battersea to do the development around there and upgrade that. And how they paid for that effectively was on development levies, one-off charges, and recurring levies on all the new development and that, which is effectively repays the £1 billion of debt that they borrowed. So that's another way to finance it here. Copenhagen, we were up there last year. This is a more interesting model. So what they did in Copenhagen was the city and the Danish state formed a special purpose vehicle. They put up all their land around the city into that special purpose vehicle. They developed that land. They borrowed against that land. They used those proceeds to fund the metro. They built 4 lines and then they ran out of land. So they came up with another great idea. The Minister of Finance called it the Kinder Surprise. They decided to create more land. So they're putting 72 million tonnes of earth, the outskirts of the city, on the outskirts of the Baltic, create more land. They're going to put a metro into that. They're going to sell that land to fund the 5th metro line. So another way to actually fund that, great metro, it runs, 180-second frequency rate, fully automated. It's a light metro again. Station boxes are the same. When the Arab chief engineer or chief architect showed it to us, he said, one thing I hate about this line is of the 12 stations, I can only get 11 identical. And they double stacked the escalators because that halved the size of the cabin, and they increased the frequency of the train to shorten the platform, which again halved the size of the cavity. So quite clever. Northeastern Link, this is a photo I actually took myself. That's down in one of the tunnels that they're building there. So that's a 20-metre tunnel. It's 4 lanes. They're building 2 of those. They've got 2 TBMs. The tunnels are so wide they can't use a TBM. They're using road headers on them. So what they've established there is they've got a state toll company, which is actually owned by the state. It's going to have the tolls on it. It's getting financed by the state, securitized against the tolls, and they're using that to actually fund some of the project as well. Montreal is just up there recently, so they've got basically a light metro they've actually built. We actually had a ride on it. It's very impressive. It again runs at high frequency. It's all automated. So how they've structured the funding there is effectively CDPQ, which is the province's pension fund, has a large equity share in it. Then the province has a smaller one. They've borrowed some money from the Canadian Infrastructure Bank, and then they're using property development levies as well. So this has already created like 20,000 new dwellings and lots, and they're charging each of those about $10, roughly, or $10.70 a square metre. So about 10,700 for 100 metre squares. That helps fund this, and then because it's a pension fund, it puts equity into this, so that only takes a return on the equity. So they're not having to repay the amount of investment they have. Because they're a pension fund, they just want to yield. So that way you can actually get the funding deployed much more effectively than like in a PPP where everybody wants all their money back. So you actually get a lot more for your value. And then we've got Martin Place here. So this is like a bit like the Sylvia Park thing, but on steroids. So effectively here, this is a market-led proposal. This is Sydney Metro. Macquarie Bank owned the land above the station. Brookfield's had the same just across the other side of town. They put in a market-led proposal that was successful. They did a capital contribution towards the station, and in exchange for all the commercial development rights above station and within station. So there are all ways that we can use to fund public and transport infrastructure other than what we do at the moment, which is just write a check and just use the National Land Transport Fund, or we borrow the money from a public person, use taxpayers to repay it. So there's quite a lot of opportunity there to do that. So just the market-led proposal, just quickly go through that and then I can wrap up and give it to Andy. So stage 0, this is sort of like a pre-day glass of wine type sort of way we sort of describe it. So effectively someone comes to us with a proposal. The team takes it through to see whether it will actually meet the criteria. This is a fairly iterative process. They have to meet public interest. Is it in the public interest? Is it exclusive? The easiest way to think about that is, can a competitor do this or not? So obviously if you own the land above the metro station, no one can, for example, and then value for money. So what you're trying to do with a market-led proposal is avoid a competitive procurement because somebody's come up with something unique or exclusive. And then we give them some feedback on that stage there, and they can lobby during that stage. Stage 1A is when they submit a formal proposal. We again test public interest and exclusive, and then that's a pass-fail type criteria. And then if that's successful, it goes to a value for money. We start doing a business case process. If that gets through that, and Cabinet's happy with it, we'll then actually go into exclusive negotiation with the government, some support, then due diligence, and then you finalise it. So that's a sort of market-led proposal type framework. It's fairly new. It's based off the New South Wales model. We've had it going since 1 December, and we've been surprised at how many we're getting. We're at the moment averaging about 2 a week. So it's quite, the team quite busy. Yeah. It's probably just a quick whistle-stop tour, so happy to take any questions. If anyone's got any questions, haven't. Yep.
So you're saying you get 2 proposals a week so
That's
far?
what we've been averaging, not so far, but we've been averaging the last few weeks at that rate.
What's your way of managing it if it gets too much? Like,
hire some more people.
they
do range from very sophisticated to a little bit. And they're not only infrastructure. We deal with all market-led proposals other than pharmaceutical, which go to Pharmac.
I didn't see energy on your priority list. Is energy therefore excluded, or?
The government currently doesn't fund an energy infrastructure.
Right.
Yeah, we own Transpower, but that's purely left to the private sector.
Okay.
Sorry, quick question.
Mhm.
So what's the best way for, potential participants to get in touch with you?
It depends on what they want to get in touch with us for.
So
If you want to give us
someone's
money,
got an idea.
I
Yeah.
can give you my card now. That's it.
Yeah, very good.
Really open to
answer.
that.
Yeah.
If you want to do market-led proposals, go to our website. All the information's in there.
Mm-hmm.
Yeah, and if you want to, it depends on what you really want to be doing. Yeah.
Any other questions? Great. Thanks so much for your time. Thank you.
Right.
Okay, now I'd like to invite Andy Hagan from the Infrastructure Commission to tell us all about what's happening at InfraCom, including the National Infrastructure Plan, which will obviously have a long-term planning horizon and look at the priorities over at least the next 10 years, if not further. As part of that, investment opportunities there, but actually also briefly talk about the components of that. So the infrastructure priorities program, the pipeline, and potentially, I think, Andy, will you also be talking a little bit about the reform potentially that might be happening as part of the plan, infrastructure reform?
I wasn't planning on touching on that so much, but the background of the plan, into the transport sector.
Thanks. Very good. Welcome.
Thank you. Just let me know. Yep. Kia ora koutou, ko Andy Hagan toku ingoa. It's great to be here. Sorry, I'm just trying not to spill everything. I might just put that over here. Yeah, as you've got the sense, I'm going to give you a bit of an update on what we're doing on the National Infrastructure Plan. We're actually not that far from releasing the draft, so I'm not going to give the game away, but hopefully give you a bit of a sense about what we're thinking about, how it might relate to the transport sector, whet your appetite to give us some feedback when the draft's released, which is kind of what this is all about. So I might just set the scene. We'll go to the first slide. Got a bit of a problem in New Zealand. I'm going to touch on 5 things that I think kind of illustrative of issues that we face in the infrastructure sector. So first of all, we've already got a shitload of infrastructure, excuse my language, 300 billion across public, private, and of course the local government sectors. That's a lot of historical investment. That's a lot of assets to manage already. We already spend a lot on infrastructure. So compared to high income OECD countries, New Zealand's near the top 10% of annual spend on infrastructure. So really quite consistent, around 5% of GDP per annum on public infrastructure. At the same time, we've got some massive productivity challenges in infrastructure. So we rank near the bottom 10% in terms of turning dollars spent on infrastructure to actual infrastructure outcomes, again, compared to OECD high income countries. And then maybe caused by those things or alongside them, we've got a big infrastructure deficit. Everyone likes to talk about the deficit. We can have a debate about how big it is, but I think we can probably all agree that there are, some real challenges and there's a bit of catch up to be done. Because we spend so much on infrastructure, paying our way out of that problem, out of that deficit, is going to be really difficult. So the Commission did some analysis on this a few years back. We've estimated that if you wanted to pay to close the gap through additional user charges, so increase in FED and RUC, or your energy charge that you get at home, or rates, we're talking about a 38% increase. If you want to put that on your tax bill, so you're in your tax rate payment every year would go up by about 21%. If you want to put it on the credit card, we're talking about 100% increase in government debt to GDP. These are not palatable choices. So there's significant problems. We need to get better if we want to improve outcomes. Our view is the problems we face are not driven by some kind of quirk that New Zealanders are just not so good at doing infrastructure, and people in Australia and the UK are better. It's about, in our view, the fact that the system just doesn't set people who work in the infrastructure sector up for success. And this is where we think the plan can help. So by setting out what we need, where over time, what sectors and the like, and also the preconditions that are needed to achieve or deliver that infrastructure, our hope is that New Zealand can get better at planning, delivering and managing assets that we will have in the future for current and future generations. A big part of the plan is about building consensus. So people like to talk about this idea of a pipeline. We need a pipeline that everyone's got certainty on. And look, it's fair to say, infrastructure policy and investment has experienced substantial political gyrations over recent cycles, creates uncertainty in the sector, carries high costs when big programs are turned off. I'm sure some of you have seen that firsthand. Big motivation for the plan is to find areas of common ground, and create that, greater stability in our investment intentions going forward. I think we need to be realistic about how easy that's going to be. There are some sectors where, political contestability is likely to be a feature ongoing, and I would contend that the transport sector is probably one of those. But on the other hand, there are sectors where or areas of infrastructure where there's already widespread agreement. So, there's common ground, at least in principle, that we should be maintaining and renewing what we already have. There seems to be acceptance that we need to adapt to the effects of climate change and make our infrastructure more resilient. No one really debates, when unfortunate events occur and, localities are affected by disasters, the need to rebuild and support those communities. So there's already lots of common ground. And I think our objective is to try and expand that area of common ground rather than, get to some sort of panacea of certainty. Just on the asset management and renewal side of things, we've done some work in the past that says for every dollar you spend on infrastructure, approximately 60 cents should be going on those things, looking after what we've already got. There's consensus on that one thing, we're already halfway there. We also don't think, and I've sort of touched on this already, that it's essential to agree on everything. So political contestability about infrastructure reflects differences that you and I might have about the way forward. That's a healthy part of society. As I said, the objective is to narrow that space as much as possible. We still need to respect that there will be differences at time. In terms of building consensus, we think there are these kind of 4 building blocks that are really important. So the first is affordability. Can we afford whatever we set out to do? The second is balance. Are we making sure that no single sectors, overrepresented or, on the flip side, left behind? Are what we're setting out to do, is it deliverable? Large-scale project failures and high-profile issues, can act to undermine consensus. And last but not least, the importance of transparency and accountability. So New Zealanders can understand what their money is being spent on, and make judgments about whether they think that's value for money or not. I think it's I was reflecting on this on the way up. Thinking about how these factors relate to the transport sector. I think there's probably some historical examples where New Zealand's endeavoured to do some things that may not have hit these targets in terms of all these characteristics, and that has led to some challenges. So the plan is going to cover 5 kind of things. This is effectively an outline of the structure of the document. It may be changed, but that's how we're looking at it at the moment. So 5 kind of things. Our forward guidance on infrastructure. What should be spent, when and where over time? I'll come on to that a little bit more. A couple of chapters dealing with the kind of the enabling environment for infrastructure. So what are the policy settings, the regulatory environment, how do we manage our institutions to enable success? And really importantly, as a Crown entity, we're going to dedicate a bit of time to how government chooses to invest. So what are the systems and processes that government has in place to allow its agencies to plan, invest and manage its assets well? We're going to talk a bit about what's in the pipeline in terms of what's planned, what we know about the projects, and also present the results of our infrastructure priorities program, which I will talk about in a minute. And then last but not least, we're going to take a sectoral view. So take kind of the 4 first chapters and apply them to sectors. So what does all of this mean for transport? What does all of this mean for health and education, the electricity generation sector and the like? So the first part of the plan is around the needs analysis. I want to start and address a misconception, possible misconception. I guess a lot of people, I think out there that the plan is going to deliver a list of projects. Government should invest in this project, and then it should move on to this one, and then it should move on to this one, and that, should extend for 30 years. If you're expecting that, I'm sorry to say, but you're going to be a bit disappointed. it's not realistic for a commission of 50 people to originate, a country's worth of infrastructure projects. That is the job of people in agencies like the Transport Agency in this building. And so we are trying to abstract away from that in our thinking and try and set out what New Zealand needs to invest in, not in the form of projects and a project list, but in a sense of needs and investment levels. And that's what the needs analysis is going to do. It will be our advice to government, and we'll also cover the private sector as well, about what needs to be spent on transport over the next 30 years, the mix, so renewals, maintenance, new investment, same for health, same for education, all the sectors. We think by setting that out, we can, and particularly if the government takes our advice, or at least takes it in consideration when they're thinking about their fiscal strategy and budget process, that we can build greater stability into the allocation level. And that still leaves room for agencies to plan and deliver projects based on, the objectives of their minister and the like. And so that's what all the needs analysis is like. You might be sort of wondering, how on earth are we going to do this? That's probably a good question. But we're really thinking about three things. So first is the state of our current infrastructure networks. So what have we already got? What's conditions it in? If it's in terrible condition, we're going to need to invest more in the future. That's pretty obvious. Vice versa, if it's in good condition. Really importantly, how much are we willing to pay for infrastructure? So you can't think about needs without thinking about willingness to pay. When money is tight, a need might be the most basic thing. It might be a dirt road, to use an extreme example in the transport sector. On the flip side, if money's flush, and we're really well off, then maybe needs looks like gold-plated solutions. And so we need to somehow factor that in. And that's, I mentioned the 5% per annum. That's kind of our approach. We've been thinking about needs in that context. And then last but not least, we need to think about drivers investment in the future. So here, think about things like demographic change. What does demographic change mean for investment, say, in health sector versus education? So we've got an aging population, probably means more on health, less on education. Same for climate change, same for technology change, construction productivity, those types of things. So we've effectively taken all of this information, put it into a big model, and kicked out our view on what needs to be spent on infrastructure over time. And the next slide gives you a sense of what that looks like. I'm not going to give you too much on the results. This is a kind of aggregate picture, but imagine this broken down by sector in the final plan. So, yeah, as I said, we think by setting this out, understanding how it's been done, and advising government, and this is kind of the basis that they need to plan, that we can build that certainty and around investment levels, not around specific projects, into our future investment kind of pipeline, as people like to speak about. The next two sections of the plan talk about the enabling environment for infrastructure. So the two things here, there's the operating environment. So how do we pay for infrastructure? How's it funded? How's it governed, coordinated? How do we plan? And how do we establish, importantly, a stable infrastructure environment for infrastructure to be planned, delivered, and managed? So the classic example here that everyone likes to talk about is, well, certainly at the Commission, maybe not everyone, is the justice and corrections sectors. So changes in justice policy have huge impacts on the need to invest in correctional facilities. And that's quite a political thing, and swings and gyrations there have real impacts on the people at corrections that are tasked with planning. So I'm not saying we can kind of solve that, that is a political issue, but sort of setting some of these issues out will help people understand the challenges that they could create for infrastructure. The second bit is around how government invests. So the systems, the rules by which government agencies plan their infrastructure, how investment decisions are made, and then the systems that enable asset management, maintenance, all that kind of stuff. We think that getting these things right is a prerequisite to getting a stable pipeline, so to speak, and really important. This slide shows you that New Zealand's results from the OECD governance of infrastructure indicators. New Zealand is the blue line on the spider cobweb diagram. The OECD average is the orange. It shows that there's quite a lot of room for improvement. You might not be able to read that, but it's basically the kind of key features of an infrastructure investment system. So long-term planning, asset management capability and the like. We've done a similar assessment for the plan using the IMF's PIMA, Public Investment Management Assessment Framework. We've run the New Zealand Investment Management System through that. And it's fair to say that we've found significant room for improvement, not inconsistent with this. Areas where there are room for improvement around long-term planning. So, our sectors, putting together long-term 10-year plans. We think central government has got quite a lot to learn from local government in that space, for example. How do we appraise projects? So are we using good, robust business case processes? Are investment decisions being made on those cases? Sounds simple, but you'd be surprised. Practice is not that good. How do we go on multi-year budgeting? So giving infrastructure agencies certainty over multiple years. In the transport sector, obviously NZTA has the GPS and NLTF. That gives a reasonable degree of certainty. Even there's still a lot of swings. Other agencies have much less certainty. They sort of have to go year by year into the budget process. That really undermines their ability to plan and invest in infrastructure. We see weaknesses in the systems for asset management and incentives for focusing on managing what we've got. In fact, we think that could be one of the biggest areas for improvement for New Zealand. And also opportunities to improve project selection. These challenges show up in a whole lot of places. You can see decreasing asset quality in the health sector, news stories about leaking roofs or leaks in walls or this type of thing. We also see it in the transport sector in terms of the big divestment, or the big gap, the big delta, if you like, between investment intentions and the level of funding coming through the NLTF generated from FET and RUC. So we've kind of focused this work on central government investment outside of the transport agency, the transport sector. Of course, the transport agency is a big part of that. But we think, equally there are some learnings for their sector as well. So we're intending to make some recommendations in the plan about how we could improve outcomes. I already alluded to one in the needs analysis, which is much better informing government's fiscal strategy and long-term spending intentions with a bottom-up understanding of investment needs. At the moment, that's a very top-down driven process. You hear politicians talk about getting debt back down to prudent levels or getting back to surplus. We think that obviously is really important, but it needs to be balanced to get some understanding of what investment needs are. Build greater certainty into that system. I've talked about the need for better long-term planning by agencies. Lots of room for improvement in the decision-making space, so better appraisals of projects, extending the horizon of the budget process beyond the kind of year-on-year, somewhat challenging process for agencies. We think there's opportunities to professionalise the leadership fraternity within the public sector. Too often, infrastructure leadership is seen as a poor cousin to policy, for example, in the public sector. And last but not least, significant opportunities to improve asset management around accountability and transparency for outcomes. I sort of alluded to this, but kind of specific to transport, probably a couple of things that we're thinking about. So, there is clearly a need to better align investment intentions with revenue in the NLTP. Because of that delta, public funding is spilling over into transport, which has impacts on other investment sectors. That creates some challenges. Also the propensity to kind of list projects in the GPS. Has some challenges as well. So those types of things are things we're thinking about. The last part of the plan that I wanted to talk about is the investment menu. So this is the kind of project focus of the plan. Here we're going to do two things. One is present some information from our pipeline. Hopefully most of you are familiar with that, but if you're not, I'd encourage you to have a look at our website. Basically, the pipeline is the Commission collecting up project planning information from the entire infrastructure sector and presenting that as a single data set for people to observe. It grows over time as more and more agencies participate. There's a lot of projects in there. I'm not going to dwell on it too much other than to note almost less than a quarter of public projects in that pipeline are not funded. And I think that probably says something about the level of certainty that we have as a sector. Also want to talk about our infrastructure priorities program. So I mentioned weaknesses in infrastructure appraisal, business casing and decision making. We think there's really good evidence to show that current practice, particularly in central government primarily, is not consistent with its own rules. So Treasury guidance says that agencies must produce business cases using the Better Business Case framework before they seek budget funding. We observe approximately 50% of projects that are funded through budget have a business case, even less have cost benefit analysis. And so the IPP is kind of our attempt to help solve that problem. So the IPP is a structured program that tries to assure infrastructure planning that's occurring by agencies. The idea of it is to provide decision makers assurance that if they choose to fund a project that's been endorsed by the IPP, that they can have confidence that it's being planned well. But also, we think over time, it's a mechanism to help, how do I put this, kind of smooth the edges or narrow the variability in that politically contested part of the infrastructure landscape. So what we're really trying to do here is build a kind of menu, if you like, of investments. So they'll be on our website, they'll be in the plan, for example. Future investment decision makers, current decision makers can look at those and say, this is a good project, it aligns with my objectives. You know, I'm going to get behind that, I'm going to champion it. Rather than the alternative, which is to champion a project which perhaps hasn't had that, you know, rigorous planning. The program itself has three components: strategic alignment, value for money, deliverability. They kind of align to the three stages in the Better Business Case framework. Sorry, let me rephrase. We also are kind of assess projects at three different stages. So stage one, which is a kind of problem definition stage. Stage two, which is options identification. Stage three, which is, you know, you preparing for delivery. It's those that align to the Better Business Case framework. It's not just about built projects. We're really encouraging non-built solutions, you know, that type of thing as well. We've just finished round one of this process. We're sort of in the process of informing agencies that participated in the outcomes. So we had about 50 applications in total. We sort of run a triage process to make sure projects are nationally significant and the information's of, you know, the necessary level that we can do the assessment. We ultimately assessed 20 or so projects. We're going to be releasing the results of those publicly as part of the National Infrastructure Plan. We've also opened round two. We've had 70 projects or north of 70 projects apply. We're going to do the assessments before releasing the final plan. So the idea is hopefully we'll have, you know, a good number of projects in the plan, but we really want to build that over time, you know, and create this kind of concept of a menu. From memory, in the first round, there were some transport projects from the local government sector. We're really keen to see that grow. We've been talking to our colleagues in the Transport Agency about, you know, their participation in the program. So watch this space on that. So yeah, hopefully that's helpful. As I said, the whole idea of the plan is to try and build a kind of shared view about what we need as a country and create or set out the way to create the enabling environment to allow us to deliver that. I might just quickly turn to timeframes, I think. So we're just about to release the draft plan. It's going to be released as part of the Infrastructure Commission Symposium. That's on the 25th of June from memory. Encourage you to engage with the plan when it comes out. We're running, there'll be a process of consultation. The Minister has to give us feedback under the legislation, but we'll also be seeking public feedback. We'll be taking that feedback in and updating the plan in the later part of the year and then releasing the final plan. Excuse me. Around the end of the year, and then the government has to respond under our legislation to the plan with how it intends to take on the findings and recommendations of the plan. So yeah, with that, I might see if there's any questions, but I hope you found it useful.
I've got a quick question.
Yes.
So you mentioned that New Zealand as a country is in the top 10% of infrastructure spending. That's per capita or GDP or?
As a proportion of GDP.
Right.
Yep.
Okay.
Yeah.
And from what I know, the spend on transport infrastructure spending is around 60% currently. Is that a fair assessment?
I'm not sure on the specifics of that. I'm sorry. I mean, as I said, in the needs analysis, we'll be sort of setting out a kind of forward view of the need on transport infrastructure spend. I think it would be fair to say that we've observed significant levels of infrastructure investment into the transport sector in the past.
Mm-hmm. Okay, so in terms of the plan that is coming out, the longer term roadmap, how much do you think that will depoliticize some of these investment decisions? We've got a 3-year term in New Zealand, obviously, that's low in comparison to the OECD average for government. So even within, with the GPS, within NLTP, sometimes things do, end up going in a different direction.
Yep.
And there's a pendulum. So how much do you think this will depoliticize?
Yeah, it's a good question. A few points on that. I think, as I said, we think actually, let me start with the kind of process. As through the development of the plan, we've been engaging with other political parties in addition to obviously keeping our own minister informed, Minister Bishop. He specifically asked us to do that. So like just yesterday, Jeff Cooper and I were overseeing Kieran McAnulty from the Labour Party and giving him an update on the plan. We've done the same for the other parties. They've been interested in the plan. You can only take them at face value. They talk about the problems that we see around swings in infrastructure. And so I do think there's a genuine intent there to help move towards more consensus. As I said earlier, I think there's easier done in some places than others. So asset management, versus big new investments. And I think we have to be realistic about that. We also think there's some things that can be done to the system to help, smooth that out. So you referred to the GPS planning cycle. I mentioned that central government could learn from local government in terms of its planning requirements. One thing we're thinking about is whether there should be a legislative requirement for agencies to do 10-year investment planning. I know the GPS, I think, had signalled a sort of 10-year sort of similar thing. So we think that's a good idea. We think that could be extended across other agencies. Okay. Get these things out in public, build consensus that way.
Mike Roach. One of the things that, I'm old in the tooth now, and I look back on the good old days and things. One of the things that I do note is that in the last 20 years, I think it is about 20 years, a lot of particularly central government agencies seem to have lost their planning ability because they've tended to wait for the politicians to say, I want to build a new road to the far north, I want to do this, and then get in behind, do that, and get into the delivery mode of that. How do you see that sort of lost capability gap being rebuilt? Because I think it's fairly critical that when I talk to people in a number of different agencies, and I'm very familiar with the Transport Agency, but they're not alone. Yep. There's not a lot of people that are thinking about how they would plan what their infrastructure needs are in the future.
Yeah, it's a good question. I agree with you. I think my view on a lot of this is there's a lot of interrelated and kind of reinforcing problems here. So weaknesses in investment planning or asset management are not because people and agencies, don't care about that stuff. It's because they're not incentivized to do it. As you say, politicians announce projects and agencies have to get in behind. That's the reality of the world that people live in. On the asset management side, it doesn't get done because when faced with the choice between investing in asset management or whatever new elective health procedures, to use an example, the choices get made. So I think it's a long game, get the requirements in place, around long-term investment planning. Like, as I said, we think maybe legislative requirements are necessary there. One of the challenges with the public sector, when you compare to local government has the Local Government Act. Regulated utilities are regulated by an independent regulator. central government self-regulates. Cabinet rules are what are the strongest form of control on what happens in central. That's not that strong, and ministers face, as I've just said, competing priorities. So get strong or stronger requirements in place, get those building blocks there. But sure, it's going to take some time for that capability to come. I don't think we should be naive that it will happen overnight.
Is energy going to be included?
Yeah, so the plan covers the entire infrastructure sector. It's not just, I mean, I accept I've probably spoken mostly about public sector. But yeah, it will focus on energy, it will cover water. So our needs analysis, for example, will set out a view on investment requirements in energy and water in those private sectors as well. Yeah. Yes.
I'm not sure if it's really a question, but you mentioned that the pipeline may disappoint some people because it's going to be quite abstracted. I suspect that's going to be true. There's a whole sector out there hoping for clarity in a pipeline of work at the moment. It's not a criticism because I actually understand, and I'm not entirely surprised that you're ending up where you are.
Yeah.
But you know, I have to say it's a challenging task.
Yeah.
And I look at, you know, what you were doing. On the one hand, if you look left, you're seeing 149 projects announced for a fast track project, fast track legislation. Did any of that come through your?
So the pipeline itself is a data tool. So some of those projects will be in there. I accept your point.
Well, it's not really a question, I apologise, but it's just saying, I have no idea how you're really going to manage this.
I think
because frankly, I don't know how the politicians can be contained.
So I guess my response to that would be, we think there's some way that the Commission can take this. You know, as I said, setting out, you know, funding allocations in sectors. You know, obviously it's the politicians to pick that up or not. They might choose to say, you know, we're not, thanks, but we're not interested. We're going to do our own thing. But let's assume they did. Put in place requirements on agencies for long-term planning. Get 10-year investment plans consistent with those funding allocations. Within that, you start to have projects. That's in the public. Get political parties on board with those plans. That is a slow burn way of getting the pipeline. But I think it's not realistic to expect that we can go straight there. And that's kind of the, you know, the balance that we're trying to strike.
It'll be hard. It's going to be an interesting sell.
I accept that I mean, that's why I raised it, because I know there are people out there that are thinking that they're going to get a list of projects. That's a very difficult ask. You know, it's not for officials to tell politicians what they should be investing in. Oh, sorry, we've got two questions on the line.
Hi, Karen Bell from Resolve Group and ITS New Zealand. Just strikes me that some of the challenges you are laying out there are especially difficult for technology projects that involve technology and including transport technology. And I just wondered if you'd comment a little bit on to what extent you've considered the technology and the need for that against some of the challenges and some of the solutions you've highlighted that your plan's trying to address.
Yeah, good question. Couple of thoughts there. So the needs analysis does take account of technology change. I think more generally, the Commission is a big supporter of you know, initiatives that improve the efficiency or outcomes of infrastructure, including technological take-up. Yeah, I think it would be fair to say we've probably focused less on technology in the plan per se, but that's not to say that we don't think it is important.
So yeah, really, really interesting to hear more about the plan. I'm interested in the kind of the conditions that you talked about, and particularly with regards to what the plan will say around the nature of how our cities and regions grow and develop. Obviously up versus out has a really big impact in terms of the scale and the nature of the sort of infrastructure we need to provide. So will the plan be making any sort of comments on that front?
In terms of setting out like a preference or?
I guess the greenfield development, the trajectory of infrastructure need will be steeper than if we choose to intensify. And again, obviously, there's a political lens in which to look that through.
I'll preface my answer by saying this is not my kind of area of expertise in the Commission. I'm much closer to the investment planning piece of this puzzle. But my understanding is the first chapter that sort of talks about the enabling environment will talk about the importance of these issues and the impacts that issues that you're talking about can have on the demand for infrastructure and investment requirements. And point to the need, I guess, to effectively try and get some clarity and certainty on those issues, without landing on a judgment.
Curious to follow up on Karen's question about technology. Say, my completely mythical example here, but flying cars suddenly become a thing. We need half as many roads. Is that the kind of scenario you would be looking at, or is that too much into the detail and you would somebody else would provide that to you?
We haven't done that kind of scenario analysis, to your point. We are putting some bands around our projections of spend requirements, but I don't think it will go to that kind of level of detail. So it's kind of going to be more like, variations around demographic change. As I said, we are taking technology change into account to some extent, but we won't be sort of talking about those, I don't know, more scenarios that have much more impact on, like fundamental impact on infrastructure per se, I guess. Yeah. That's a good question. And actually, on all these things, I would encourage you, to the extent that the plan comes out in June and you think we've missed the mark, then that's what we want to hear.
Do you cover planning for emergencies or disasters?
In terms of response or in terms of investment requirements thereafter?
Investment requirements.
Yeah, so that will be part of the content of the plan. So we're explicitly taking account of the impact of natural disasters and climate change in that needs analysis that I've referred to. Yeah.
Well, there's no further questions. I think we've probably almost gone around the room with questions. So very, very fascinating.
Thank you.
And we're looking forward to the plan coming out in June, end of June.
That's right.
Having a look at that.
The space, yeah, please.
Of course, this isn't the end. It's not time to go home yet. We will be making the recordings available, and we are going to be going to Huxley's now. There will be a tab on for drinks and nibbles. Karen?
Armin, can I please be rude? I should have checked this with Armin, but I just wanted to let everybody know that we've got our conference coming up.
Of course, sorry. I think there are some slides around that. Sorry.
A couple of words about that.
You're right. Sorry. Thanks, Karen.
This is just me butting in as events chair for ITSNZ New Zealand.
Of course.
I just wanted to let you all know that we have our annual conference coming up, TTEC, and Armin may well have got it. I just didn't want to miss the opportunity. On the 9th and 10th of July in Auckland this year, for the second time at the University of Auckland, and this is a great opportunity to hear about all sorts of different projects, activities, initiatives, technologies that are developing around some chosen themes. So really encourage you to look up our website, see what we're covering, and see if you could make it to Auckland.
Thanks. Just a couple of other things to say about TTEC, of course. It's July 9th and 10th in Auckland at the university. It's a great venue. And we will have, actually, can we just go to the next slide? Sorry. We've got a really great set of speakers at TTEC. So that's from government, both central and local, quite a good representation there. Also industry leaders from members and other companies that potentially will be members one day, maybe at TTEC. And the university as well. So some really great speakers on there. We're looking forward to seeing you in Auckland. And we've got another event coming up as well. It's a webinar. If we can just go to the next slide. Thanks, Brent. So the last slide here before we exit the building for drinks. But this is happening on the 17th of June. It's a webinar put on by Open Plan, AT and Chorus. and it's on end-to-end road corridor management. So please tune into that on 17th of June. Yeah, that'll be really interesting. Thank you. Thanks for your time. And thanks, Karen, for pulling me up on that. It's important. Thank you. We'll see you at Huxley's. Closing karakia.
Thanks, everyone. Kia tau, kia tātou katoa, te ao, te aroha, me te marutau. Te hei Māori ora. Thanks, everyone.